Here we go. Damn it! I pinched it! I pinched the inside of my hand!
What is going on YouTube? It's Brendan from Market Makers, dealing you the Sigma you need to succeed in these Ponzi markets. Great Thursday update. Of course, we're going to look at Bitcoin, S&P, NASDAQ, global markets, but we're also going to look at some individual assets like the AMD chart. This asset is now trading at 1,000 plus PE, price to earnings, based on future growth and expectations, aka bullshit. It's based on FOMO of the AI space. So we're going to look at AMD, NVIDIA, Tesla, and guys, SimpleFX just added palladium, copper, platinum as well to their metal space of silver and gold. So I'm going to give you my brief thoughts on that. And if you guys want me to start making a separate metals video when they pick up an activity, I'm thinking about doing that. So just let me know in the comments. But let's talk about a couple things bothering me. Not to get off on a rant. How could something bother me, right? Not to get off on a rant, but there's two things that keep getting repeated over and over in the comment section. I have people ask me questions in the Discord about this. The first thing is the election cycle. The market can't go down because this is an election cycle. People watch these guys on YouTube, and I just want to say a couple of things. Most of these guys doing TA on YouTube do not actually trade. This is what I do full time. I retired, as you guys know. I trade full time after trading for the last 20 years. So most of these guys don't trade. Most of these guys, B, do not understand economics. And C, most of these guys have zero idea about mathematics, business cycles, or statistics. So when you hear people say, well, in election years, the market goes up, and they throw out these different numbers, 85%, 91% of the time. Guys, when you look at something across a spectrum of 130 years, given that bubbles are outliers, they're outliers. They don't occur with frequency of every 3 years or something, right? You have to look at the subset of data and recent market history. Since the year 2000, which was an election year, we've had 6 election years. In 3 of the 6, the market has gone down and gone down dramatically. In the year 2000, the market fell 19.5%, an election year. In the GFC 2008, an election year, the market fell 50%. In 2020, an election year, the market fell 35%. And here we are in 2024, the 7th election year since the 2000s, in the 7th election year, and we're sitting on the precipice of a massive recession staring at you in the face that we went over in so many videos now. So I'm not going to recap it all, but the LEI index, the yield curve inversion. Today, the Empire State Manufacturing came out since my last video. Minus 43%, absolutely abysmal, to the point that it just scared Tom Lee. I'm going to play a video clip from Tom Lee so you guys can see this. Minus 43%, taking you back. Lee, throw their article up from MarketWatch. Taking you back to May of 2020, okay? Huge contraction in manufacturing. Now, depending who you watch, these are black swans. Do you know what a black swan is? We've been over this on the channel, but for the new subs, Black Swan, coined by Nassim Taleb by a book of the same name that he wrote, is an unforeseen market event. Things breaking in a recession, things cooling off and cratering in a recession is not a black swan. There's no indicator for a black swan. It's an unforeseen event. This is a gray rhino as it was written, but I call it a black rhino. This is an easily foreseeable event that most people choose to ignore. So you mean to tell me, gee, Brendan, a recession's coming, potentially a huge recession with the longest and strongest yield curve duration in market history, but the Empire State Manufacturing cratered. Oh, that's a black swan. No, that's not a black swan. That's like the most obvious thing that you would expect to happen. Okay, just like when unemployment skyrockets, when the recession actually sets in. Show you that chart all the time, Lee. Unemployment chart. Go ahead and highlight in red the recessions for the ladies and gentlemen. When unemployment skyrockets, that is not a black swan. It is easily predictable. Every single recession starts with unemployment at a trough, which then shoots up during and after the recession. And we hit a 54-year low of unemployment. The only direction unemployment will go up to is northwards, okay? And we have never had in a single market cycle in US history unemployment under 4% that did not go over 6%. Okay, so keep that in mind. Greater than a 50% increase from where we are now. So, as all of the economic indicators continue to crater, you'll have people on YouTube again that don't trade, don't understand business cycles, don't understand economic cycles, and don't understand statistics and mathematics tell you things like the market can never go down in an election year. Well, that's just wrong. Okay. It's just absolutely wrong. And you're listening to somebody that has no idea what they're talking about, as I just laid it out. Now, the second thing I want to talk about was the Empire State Manufacturing, guys. This, again, the economic indicators, remember the LEI index has been printing negative for 20 months in a row, and it'll be the 21st month after this month. The GFC is the king at 26 months. That takes you out to the summer. So this is why we look at the fractal pattern of Y2K and how it's playing out, because this is exactly how I expect the market to play out. You had your July high, your October low, rally up through the winter solstice into January peak. And I think that peak will happen by January 25th, the wolf moon. And then you are selling off. And that breakdown, that sell off going into late February, I think will be between 8 and 13%. It was 10.5% in the dot-com era. And then we're moving up to a new all-time high. That's if we follow the pattern to a T. But as of now, I believe that is the pattern we are following. And after we make that peak, guys, at a bare minimum, I expect the market to take out its low, because not once in U.S. market history have we ever had any recession, slight recession, shallow recession, rolling recession, whatever you want to call it. It doesn't freaking matter. But not once have we ever had any recession where the market did not, at a minimum, take out the low. And I believe Bitcoin and the other assets obviously will follow the largest market in the world as the S&P drops down to 3,200. And the market bottomed off of that low, the first bottom. I expect that could be in the late summer or the fall equinox is a likely candidate. And then, yes, you have the election right there in November. But again, this would be the fourth out of 7 now since 2000 election years that would be negative. And that's how I think it's going to play out. Then you can have the debate. The bear camp, the bull camp, I don't give a shit what camp you're in. The debate is, can the Fed save the market? The Fed tried to save the market in .com, which was not a strong recession, did not stop the S&P from falling 50%, the NASDAQ falling 84%. The Fed tried to save the market in the GFC, which was turned into a global crisis, as you guys know, did not stop the S&P from falling 57%. So the debate is, when the Fed cuts rates to zero, which right now the market thinks is bullish, any of these rate cuts, which it is not historically because they cut too late. The economic damage has already been done, as demonstrated by the Empire State Survey. Will the Fed when the Fed cuts to zero and prints money, can they save the decline? Well, if they do, you're still taking out the low because they've never stopped that. And if they don't save it, then you're looking at your bubble targets, which will take longer to play out to get minus 50% in the marketplace. Lee, let's go ahead and play that Tom Lee clip real quick.
This is the Empire Manufacturing Survey, folks. If you don't know what we're talking about, don't worry. 95% of you probably don't. It is a manufacturing survey around New York State, and usually it gets completely ignored by Wall Street. Nobody cares, except this data point, correct me if I'm wrong, Tom, came in so awful that even people who didn't care about this Empire survey suddenly started to care.
Yeah, it was pretty atrocious.
It was still awful, but you think it's just one noisy data piece?
There's a lot of things that can make it noisy. We know supply chains are being rerouted right now, and we know markets have been tumultuous. And, we've seen that during weeks of market corrections, regional surveys often tank because the purchasing manager might just say things are worse, but it's because the stock market's down. So it's really hard to know how much is signal versus other things contributing to it.
So this is Tom Lee, guys. So just remember, 3 weeks ago, when the Russell was trading above 2,000, which it has now lost $150. It went up to, I think he made that comment around 2,050. But Tom Lee said 50% upside in the small caps. Because remember, Tom Lee has no recessionary call, right? Has no recessionary call, just ignoring all the historical data. So he has no recessionary call, 50% upside. The Russell fell 150 points. And now he's calling for the 7% downside in the market. Looking at that sell-off. The sell-off is obvious that's incoming. What's not obvious yet is, are we going to push up this last little bit to the 25th and try to make a new all-time high before selling off in the S&P. But let's go ahead and look at the charts. Lee, without further ado, let's start the show. All right, guys, please do like and subscribe to the channel and to the video. Really would appreciate it. And if you want to trade these Ponzi markets, my friends, check out SimpleFX. They sponsor the show. With our link, you do get our exclusive bonus. And check out BingX for all the cryptos. Both those links will be pinned in the YouTube comments with Lee's Telegram. You can message him if you have any questions. And both these exchanges will pay for your first month on our Discord. Guys, let's go ahead and kick it off with the S&P. Couple of key pivot points that I'm tracking I want to share with you guys. Looking at Fibonacci pivots here specifically from our 4,100 low, kicking this out 377 bars, which is a Fibonacci number. You come out to March 29th. Again, this could be the top for that all-time high. This could be the key pivot point after the spring equinox, but before the total solar eclipse. That window, we're going to talk about it in just 1 second here. Another key Fibonacci point for the current trend is the 89 days, calendar days. This will put you right here on January 24th, the day before the wolf moon will be 89 days. I believe if we do push up a little bit more, that's going to be your top. And we've showed this on the indicator over and over. Specifically, let's look at the full moons here. Let me get rid of this. It's a trading view indicator, guys. Any of you can get that indicator. But you can see here, again, the key pivot points you've had in the marketplace based off of this. I show this all the time because people question it all the time. Not every lunar cycle means you're going to have a pivot. What you do, just like you trade with Fibonacci or with patterns, you look for confluence. Again, top 4,600. Again, a top for a 400 bar drop. Again, the lunar eclipse for the bottom, 9-week rally up, your first up in this trend after the rally. And January 25th is the wolf moon, and it's a Fibonacci pivot. I think it's going to be really interesting to see how that plays out. Let's go ahead and look at this as well. Let me open this up because we have the Puet's crash window also opening back up. Let's go ahead and look at the Puet's crash window. So we have the spring equinox in green here, March 21st. Just after that, you have a full moon. And then just after that, April 8th, you have the total solar eclipse. This opens up the Puet's crash window, which extends to April 23rd. So this would call for, if you get a top, you will get strong selling afterwards, which again goes along with the Y2K fractal because we have the January peak, February sell-off, then we rise up, make a new all-time high in March. That's the peak, March, April, and then sell off, okay? And then it's all going to come down to what the Fed can do to save the market if they can. Let's not get ahead of ourselves. Let's look at the current TA. But that's my window up here for the peak. But until then, see if we get a slight push up and then a move back down. Let's look at this from a TA perspective. 5-wave topping pattern. We talk about topping and bottoming patterns all the time. 3-wave tops, 5-wave tops, 3-wave bottoms, 5-wave bottoms, 5-wave topping pattern, but you did not get a strong retracement here on the daily time frame. So you're still holding your range. You came down to the 618 at 47.20, bounced back up. You're just getting volatility here. Running out of time if this pivot is to play out on January 25th as a top, which we'll see. We'll see when we get there. But keep in mind, the structure I'm looking at here, guys, is the W structure. The W structure. So what is our target for where this could go? Now that we have this structure low here, if this low holds at 47.20, looking at 48.59. Remember from our larger trend-based fib we talked about in the previous videos, 48.67. So now you're seeing 48.59. So let's call it 48.50 to say 48.75 if we get this upward move. Now, does it have to happen? No, you had a 5-wave topping pattern. You could just start making lower highs and start descending from here. I just think you may see this last attempt at push up before the sell-off, but we'll see. 48.29 is the 1272 as well. So watch that for a lower high, which will still make you a new all-time high. 48.50, 48.75, guys, is the target if we get a more bullish market before this potential January 25th peak. How's this playing out on the indicators? MFI on the daily is bearish. Momentum's flat. So really, it's just going to come down to FOMO and sentiment. FOMO and sentiment to see if we get this pattern, guys, or if we just make another lower high and start rolling over. But time is more important than price. So I am not trying to jump into anything because I believe we're adhering very closely to that fractal pattern, again, that we shared last video. Let's look at Bitcoin, guys. 3-day chart. Bitcoin still holding its Wyckoff trading range. Talked about all this for many, many videos. Diamond pattern breakout October 23rd gave you that trade, 50% up move. Talked for weeks about getting to the 618, 48, 562. Got just above it, wick back below it. Now you're back down here. The move that I would expect if the S&P does want to come back up, I expect this move. You're going to have a larger M pattern form either with a lower high or take it out with a higher high. But either way, I think you're coming up to a peak. What would be significant up at this level would be hitting that 50K number, big psychological number. Remember, the market's mission, big money's mission is to trap as many people as possible in the market by selling into them, and then the prices will drop when everybody piles into the elevator at the same time, right? So this is the move I think Bitcoin's going to do here if we get this rally. If not, the level you need to hold is 40,226. And just looking at your Wyckoff pivots, if you were down, we'll see if you retrace, back test 40,226, then pivot out to the downside, giving you your Livermore pivot, right? So for now, you're just holding your trading range. Let's look at this on the indicators really quickly. MFI is right at the median line on the 3-day chart. Momentum's basically flat. Let's look at this on the daily. Daily, you can see your trading range here still in effect. You're right at the median line on the daily. Got a baby W forming there. MFI just turned bearish. Let's move forward. NASDAQ, guys. NASDAQ, we have our larger targets that we talked about, obviously off of our Fibonacci, but the targets we want to look at now are for the current pattern that's forming, right? If we get the push to the upside with the S&P, will the NASDAQ pull up? You already have the kickback down here for your W. So let's go ahead and pull this and just see what we could have here. On the NASDAQ, 17,139 would be my target if we can break up above this fractal high here with a more bullish S&P for a few days. That's 17K, 16,999. You get above 16,999, looking at 17,139. Obviously, this is just a projection of the 1618. This would be a harmonic to get there and give you that W pattern for this. If the market decides to get more bullish, that's what I'll be looking at. So watch that 17.1. You got to take out 17,000. Let's look at the indicators really quickly. There's your W. You see it? You got your W here on your daily time frame. Now, what you want to see is if you can get that last move back up to bring you back into the overbought territory. Momentum starting to swing back up a little bit on the daily time frame. So We'll see how it develops. Baby S&P, here's your Dow. Look at your topping pattern. Very clear again. 1, 2, 3, 4, 5. Sell off. But you're holding your Wyckoff trading range. You're down thrusting. So the natural move here would be maybe come up and do one more move and see if you can retest this. 37,800 is still your key resistance. If we're going to look at this from a resistance perspective here in Fibonacci, let's see where you could get to here. That's your current fractal, maybe 38K. And if you can get above that, 38,250, that's what you'd be looking at if you got really bullish in the markets going into that topping action in the end of January, okay? Let's go ahead and look at this. MFI is oversold here, and there's your W pattern. You see this? Here's your W. There's your pullback right now, and you want to see if you get that move on the MFI. Let's get out of that. Momentum's bearish. So again, this will just track with the other markets, guys. And when they start moving, you'll know if this is more bearish if you take out 37,169. If you take this out, you spike down, you retest somewhere back in here, maybe slightly in the range, and then break back down, take out that fractal, that's your rollover, okay? Until then, looking for this to do something to come up to one of these levels, 37,682, or retest 37,800. Let's see what the markets do. Let's look at the Nikkei. The Japanese market finally took out its all-time high from 1989 when they had their massive bubble. And look at that harmonic expansion right on the 1618, guys, 35,957. There's your resistance. Now we want to see what type of pattern we get. Do we get a type of W pattern that forms here? The Nikkei wants to go up higher, or do we start topping out with an M pattern? And we'll see as this develops. Remember, this is the last central bank still easing. They're doing yield curve control. But like we talked about, guys, we waited for this to get here. We waited for days. I covered this previously. We talk about it in our Discord as well. Waited for days. It broke out to the upside, got to 35,957. So that's a nice move there on the Nikkei. And some people, I'm sure, traded this break, the fractal break, the Wyckoff break to the upside at 33.6 and caught a nice trade as well. Let's look at the Russell. Tom Lee was telling you 50% upside when the Russell is right here. And we will have potentially more upside, obviously, when the markets do move, if they track to the Y2K fractal pattern and give you that March, April all-time high again. But right now, this is a three-wave pattern, as you can see it. This is a three-wave pattern. It's either going to do the Bitcoin thing, give you a lower high or potentially a higher high and take this fractal out. If we get some more upward movements in the market, you're holding some resistance or support here. This looks like the 786 bounced right off the 786. Again, I want to see some market movement to the upside is how waves typically move. Look at this big sweeping move down on the 3-day, almost getting to oversold. Momentum switching negative. Let's look at the daily real quick. See where we're at. Daily, you're trying to bottom. You see this? You're trying to put in a bottom here on the daily, and we'll see if we get that last move up, right? Get this last wave back up, do something like that. We'll look at some fibs and we start waving up and give us some targets for those of you interested in the Russell. Let's look at the DAX. Again, this market, 16.9 has held absolutely gorgeous. 16.9, I think this is the same thing. You're doing this, you have this big move down, big move up, you're going to have this M. Okay, so you're going to have this M form. And watch 16.9. It's your key level, but let's take a fib from this fractal high down to your current low. And the levels you really want to watch are 16,755, 16,865. So basically 16,755, 16,855. If you look at this, that would just be this move back up to this level. If the S&P does a little bit more rally. Now the DAX could track stronger, and we'll see, because 16.9 is still your peak. Watch for this. It's a 3-day time frame on a much larger move here if we start moving that way. So look at your indicators. There's your wave down coming to the median line. Could easily get a bounce here, guys. We'll see if this bounce holds up, gives us another lower high to deal with. Same on the CAC 75.75. Key resistance, which we knew about for a very long time, 850-point drop from that last resistance. And here's your current resistance level, 75.75, couldn't close above it. And here's your sell-off. So this to me, again, this on a macro picture is a massive double top, which is probably going to come up something like that on these European indices. So if we pull this, 75.75 being your key resistance, pull this from your fractal high, tracking 75.11, and then look at your 786. Right on 75.75. Love to see this get back up to 75.75. And then this is a trade if the markets are tracking in confluence with my TA excellent. That would be an excellent trade. So keep your eyes on that. We'll be covering that as well. AMD, guys, tracking AMD very closely, over 1,000 PE, AI FOMO bubble, still pushing the markets. You guys see the giant W here on the 3-day chart? This is a giant W pattern. You see this? It's your giant W pattern. And there's your targets. And you already blew through the 150. Well, you've just $1 above it now, but you blew through it earlier today at the 1618, 157. You got all the way up to the 902 at 168. The higher this goes, the better. You took out your all-time high, not on a closing basis yet, but you took out your all-time high. Lots of FOMO in this stock. Want to see this thing keep pushing up. Now, the good thing is, if the S&P maybe starting tomorrow or starting next week starts waving up a little bit higher to take out the all-time high, maybe the NASDAQ moves up, maybe these chips move up as well with NVIDIA. The bigger they are, the harder they fall. I would love to see this thing get really euphoric. Earnings, guys, are on the 30th, so we'll keep that on the radar. Right now, you're tracking back after making this all-time high, so we'll see how this settles out. Let's go ahead and look at NVIDIA. 1618, perfect hit, 570, right? 570, harmonic expansion from our Wyckoff trading range. So now the key is what the indices do, because if the indices just track sideways or start rolling, you're going to see NVIDIA do something like this. Same with AMD, okay? If the indices do that last push up here into the end of the month, then we could see some further upside here. We're going to track these targets, but nice to see these targets hold up. 570, current price, 563. These are ones to watch in my book. Tesla, guys, we talked about harmonic symmetry, 3 waves to a bottom, 30% down, 30% down. Tracking Tesla here for the third wave. If we go 30% down, we're like at 185 Tesla, I believe. Yeah, 185 right there. So we know that we had these targets. We talked about this for a very long time. Got up to the 618, above 259, couldn't close, sold off, right? So if the markets do start reversing, you could have this reversal pattern here for your W form. If they do not, or if Tesla has its own idiosyncratic story, then you're looking at Tesla potentially dropping down to 185 before you get a reversal. That key pivot that you want to try to hold is right down there at 194, and you're at 208 right now. It's 209. So let's see if this keeps dropping down to the pivot or if you can start reversing. But that's Tesla. All right, guys, so let's check out gold. Gold made that newer low here. So my target for the upside move, if the markets move back up, is 2142 to complete that W pattern on gold, if we can do it. If we can do that move, if the markets move up. If not, you're going to start making lower highs and topping out and rolling over. So that's where you are right now on gold. 2016, obviously key psychological level is 2000. Now, SimpleFX added platinum. They added palladium and they added copper to go along with gold and silver and the metals you can trade. And something I want to show you guys, let's look at platinum. This is why I love Fibonacci. This is why I love Fibonacci. The rally high right before the pandemic, right? Look at this, 1618, 1335 on platinum, 40% downside ensued. And you got this target for this 1618 a year before price got there. Talk about a swing trade from above. Awesome. Now, what I want to talk about in the metals, and I'll start making, if you guys are interested, some separate videos on metals when they start picking up. Because as you can see, from a swing trading perspective, they're tracking largely sideways. Metals in the next commodity run up, okay, the next commodity super cycle, if you will occur either at the bottom, the beginning of a new bull market when everything starts being in demand, right? You're looking at platinum, you're looking at copper, Dr. Copper, looking at palladium. Palladium's used in jewelry, it's used in batteries. And if you zoom this out a little bit, 2018, guys, look at your 2018 down here. You can see your massive run up, massive sell off. You're back at the lows. This cycle in metals will repeat in the metals in the next boom, okay? So whether that's with the Fed reinvigorating the market, cutting rates to zero, we'll see. We'll see how that plays out down the road with the fractal pattern as well. But as of right now, massive sell-offs in the metals space. Copper's holding up the best, but still not very good. When you look at copper, a big run up post-pandemic, and now it's sold off. So you're just going sideways, tracking sideways. But I'll be keeping my eye on these and I'll share these as well as I see things develop that people may be interested in. Hey guys, have a fantastic weekend. Again, please do like the video. I'll answer your comments as always, and I'll talk to you all Monday. Take care, everybody.